Saturday, we're going to try to do this every Saturday at 10 a.m. No, we're going to try. We're going to be here, okay? Especially now with the markets moving like this. Okay, we've been giving you our opinions. We've been telling you our views and how to adjust, and that's what's worked for us. What the big part of the market right now is making adjustments, and people don't know how to make these adjustments. And the adjustments are first is speed, and then how to control your fear. But if you can adjust, then you know what? The speed will not scare you as much. Okay, if you expect it, if you're prepared, when it happens, you say to yourself, what do I do? Or if you prepare yourself and say, okay, what will we do? And that's what helped us. This week was easily. Think about it, you're only talking about 10 days ago when the president made the announcement. It's been the wildest 10 days in the history of the stock market. Okay, and this is not because someone got sick, not because someone got shot. This is because this is all global. And what's going on now is we're causing friction. So the movements aren't U.S. based only. Okay, we're looking at the U.S. stock market. Think about it. The world owns U.S. stocks. You go around the world and you ask them, you ask anybody in Asia, in Europe, in different parts of the world, name me 5 stocks you know. I'm willing to say a few of them are going to be Google, Apple, Nvidia, Amazon. You ask them to name 4 or 5 other stocks that aren't in the U.S., and I got to think they're going to have a hard time. Okay, so what does that tell me? It tells me the whole world is involved in U.S. stocks and the big names. So if there's a problem or if there's friction, they're going to take down their exposure. And that's the second wave of air that's been inflating these stocks for a while. The market had dropped unbelievable in a 5-day period. But in my opinion it was inflated. It didn't belong up there. So all it did was just get back to fair value. The problem that scared everybody because it did it in 5 days. If it would have corrected over a 3-4 month period, be nice and quiet, you wouldn't see this panic, you wouldn't see this fear, but because it happened so fast, people had to adjust. We always use the analogy, you're driving 30 miles an hour, now you got to drive 60. A lot of people don't know how to do that. But when they figured out how to drive 60, the market continued to go. Day 3, day 4, day 5, and the market went to 120 miles an hour. Now, very few people can drive 120 miles an hour, especially that you were driving 30 a week before. What happens when you think about it? Use that analogy. You go from 30 to 120, even if you learn about it, other people that are forced to be in that lane don't know how to fix it or don't know how to drive. What happens? You have accidents. That's what's going on now. You have people having forced liquidations, margin calls. Everybody on this planet, everybody, at least in the US, if you have a 401k, an IRA, a pension fund, you own Apple, you own Nvidia, you own Amazon, you own Google. That's in the package. So when they have to force to liquidate or trim, then you get peripheral. Okay, and what's going on with this? You create opportunities. That's what we did all this last 10 days. One thing we look at, because I've been in the commodity sector my entire career, so I look for value. One thing we've been on for almost 2 years now, we have not changed our view and we won't. And you'll see that as you go along, or if you've been following us, is the price of gold and the price of silver. We love the price of gold. We will not change in our view. Price of silver, we try to navigate around it. Now we think silver's getting ready to go. Look what's going on. This is the price of gold, guys. All-time highs. What's even wilder is that gold had up $100, up $100, and almost up $100 3 days in a row. I've been in the gold business for over 40 years. If you had a $100 move in a month, it was eventful. Now you have almost 3 back-to-back days. The gold market is coming apart at the seams. Not coming apart, it's exposed on how illiquid it gets at certain areas. Everybody wants it. Gold is not a meme stock, but it's got the meme symptoms when you get to parabolic areas. Okay, you're in cyberspace now. No one knows what to do. So do I buy it here? Do I miss it? Do I chase it? That's what's going on. So we're on this planet. We aren't getting out. Okay, what we're doing is we're taking advantage. What we did this week, we grabbed some more gold equities. We have gold equities on. We trade around them. One that we like a lot, and it's been the one that's been the weakest, and we think it's going to catch up real fast. SA. This is the one we think is going to catch up real fast. Seabridge Gold. We have this on, and this for a long time. I trade the equities, gold equities. We have baskets. Ones that we like to trade, ones we have value, ones we're just going to hold because we think there's real room, and ones that you can actually trade the range. This one has been intrinsic for a long time. It means if gold goes, this one goes. It stopped when it came out with some bad earnings, not earnings, just the way the company was structured expense-wise. So it came back and it's got to restructure. But as the price of gold goes higher, I think it's going to become intrinsic very fast. I think this has a lot of room. when gold was up around these areas, this is where the stocks were, this stock. Okay, then gold came down, this came down and had the story about their expenses. They're trying to recover. I think they have recovered, and you washed everybody out. I think this one is going to fly. And I very rarely use that word fly. I think this one is going to fly. It's going to catch up and do what it's been doing for years, catch up to the price of gold. So this is the one we like a lot. This is our biggest position. But we have other gold positions that we trade around. One of them, NGD. Okay, we trade around this. We putting it right back on. This is a cheap way, not cheap way. It doesn't make a difference. It's whatever you invest. But it's a way for us to get in and get good exposure in gold. NGD. And now look at it. It's getting ready to go again. We've had NGD. If you've been following us for the last year, year and a half, yeah, even more. We've had NGD on around here. And then we got out of all of it right around, no, we sold it all here. Watch it go up, come down, and now we started putting it back on. We think this one's going to go a lot higher. But we're sitting there, and something that we bought for $1 a couple of years ago, $3.5, $4, and we think this one's got room. That's one way. The price of silver. Silver is not the same as gold. People like to trade it like gold. You can't. Silver is very speculative, and it also is sensitive to the overall market. Gold, as you can see, is not sensitive to the overall market. Gold is becoming a currency. But people like, if you miss gold, people say, well, let me buy silver, because that's what history tells you. Okay. But when the market comes off and gold goes down a little or pulls back, people scamper out of silver. Wait till I show you. Okay, I showed you the gold chart. Where do you see the silver chart? That's silver, the same time frame. So as gold just sat around here, made new highs, silver spooked everybody out. This is last week, guys. This is how you wash people out. What does it do? Creates incredible opportunities. We think silver is going to go straight up. Okay, it's going to do a lot of work around here, but we think silver is going to be a lot higher down the road. So what do we do this week? We trade around our silver stocks because we have been getting out of them. We're getting right back in them. We got right back in. Let me find the silver stocks that we bought this week. Pan American Silver. This is one that we bought on the washout. Okay, we got Pan American Silver on. We actually, I even added. When I say we, I mean myself. All you're doing is looking over my shoulder. We added on more Pan American, even up here, because I think silver's ready to go. Another silver stock that we get out of and we put it back on, EXK. And what do? We put our position right back on. We had gotten out of this. Okay, we sold all of our EXK. We've been on EXK for a while. In and out, in and out, in and out. Sold our entire position up here and had no EXK on. I'll tell you, I was kind of like going to sleep without, I felt like I'm missing my pajamas. I'm missing my underwear. I'm going to sleep with none of this on. But it worked out okay because we were trying to capture some profits. And we said, we're going to get right back in. What did we do? Got back in, got back in, got back in. Now we think we're getting ready to, that's going to go up again. So we traded around it, put on our full position here. You know, not all here. We scaled. Our plan was to scale, scale, scale. We may even add on this because we think this is going to go. So this is the way we navigate around these positions. A couple that we have on that we traded around is another sector because, like I said, we look for opportunities. And we think an opportunity now is the energy sector. And the planet has turned their sentiment big time on the energy sector. They think the energy sector is going to cool, the demand's going to change, and the market's going to go lower. Okay, it makes sense if oil's $80 a barrel, $85 a barrel. Not when it's $60 a barrel. It's too cheap. It's below sea level in our opinion. But the oil market got itself caught long. If you remember about 2 weeks ago, President Trump said he disagreed with Putin and caused a little bit of friction. So what happened to the price of oil? Oil went from $60 to $70. This is all that murmur about the friction. So the market got itself, it put what we say is war premium back in. Then we had this financial washout with the tariffs. So these people got caught, they got burnt. Then you got the sentiment changing. So those people want to get out of just what they have on. And then you got people saying, wow, the world is going to break down or slow down. We want to be short. So the world went from being long for friction, getting caught and getting burnt, the normal longs saying they have to get out because they got it down below these levels, they stopped out, and then the sentiment saying, get me bearish. Okay, it happened so fast that there's people short down here. In my opinion is, this was a trap, okay? Now, only because I'm looking at the absolute price. I'm reading oil below $60. I'm reading gasoline in the U.S. below $2 as we approach driving season. Okay, the downside could still be there, but I think it's limited, and I think the sensitive side is the upside. So what do? We bought oil. We bought oil, we bought gasoline, we bought equities. Because I think the market, what they say, sold into the hole. And the thing is, if they're caught, same thing that happened up here where they got caught and they had to get out. Well, the people that got short, they're going to have to get out. And we can keep trading this. I'm not saying oil's going to $75, $80, but I think below 60 is wrong. And I think from right here, we got a better shot almost at $70 than we do at 55. Think about this. Right here, it's around 61 and change. Just my opinion. I think easily the odds are better that it's got a shot to hit $70 than it does to hit 55. And we're right in the middle of it. And I say what I want to say, but I put my money on the line. Okay, so what do? We look for opportunities. One, Valero. This is a refiner. We think the price of gasoline is too cheap. Okay, like we say, gasoline below $2 in the U.S. summer season is wrong, but it's down with the tide. So this has been good to us. This has been our favorite stock for about a year and a half. We figure out how to take 4, 5, 6, 7 points at a time. We've done it a half a dozen times. So we bought Valero. And we think Valero is the one because that's the margins that refiners make money if they can sell the gasoline here and buy the crude oil here. That's their profit. That's the margins. So we got back into Valero down here. That's one way we think it's going to bounce. One that we have on, and we're sitting on it, and I don't know why it's this low. You know, you guys got to ask me. I'll tell you the ones that are right, ones that are wrong. We've been on rig for a long time, and this has not been working. Okay, this is a driller, and we thought it could never get below $3. Well, look at the work it did last week. Sat below $3. It actually printed $2. Okay, this is one of my largest positions. It's not working. Okay, I think this one can catch up. At this point, I'm saying the downside compared to the upside. This could easily turn and be $4 or $5. If it doesn't turn, where can it go? $1.75, maybe $2 again. So now the risk reward is different. Now I'm trading risk reward instead of my idea. That's the wrong way to trade, but that's because it's so cheap. All right, I've been wrong on this one, but that's another one I have on large. Okay, now we're looking at foods. Why? Say whatever you want. The world is still going to consume a certain amount of oil every day. It's going to consume a certain amount of foods. It's going to use up industrial metals. No matter whether it comes from China, comes from the U.S., comes from Vietnam, comes from Europe, no matter where it's coming from, the population is not disappearing. But the prices have come down because of the friction, because of risk off. And when the smoke settles down, or the 20-foot waves become 5-foot waves again, then you go back to the math. Market needs foods, market needs industrial metals, market needs energies. So what are we looking at? We're looking at foods. Price of soybeans went straight down because if the U.S. and China were battling, China buys all their soybeans, a lot of their soybeans from the U.S., so they'll spike them. You still got to eat their soybeans. Okay, so the price of soybeans came down. We think they're going to go right back up. That's one. Price of corn. U.S. is one of the largest producers on the planet of corn. Okay, people still going to eat corn. Corn is in everything. Everything you eat, whether it's corn, it's in a syrup, it's in an oil, or it's in corn, and it's feeding animals. This is another one that's just going to keep going. The problem is you got everybody out. So you got to find ways. So what do we look at? We look at something like a fertilizer company, Mosaic. That's the way we want to be long some fertilizer. If grains are going to go, prices are going to go, price of fertilizer is going to go. That's one. We look at processors, Bunge, BG. We traded the stock 2 or 3 times in the last few months, and it's been good to us. We want to get back into this one too. This one got around here, we caught it. Pull back, we caught it. We're doing this a few times. We think this one now is finished down here. The work down here is finished. This is a food processor. I think this one's going to work its way higher, and this is kind of an investable one. The market's tradable now. I don't think it's investable, but when you see opportunities, you can catch nice trades. All right. Any quick questions before we get to the next sector?
Wait, what about the gold to silver ratio?
The ratio.
Said 100 to 1.
Okay, guys, I've been in the metals business since the 80s. I don't know anyone who's made money trading the gold silver ratio because there is no rhyme or reason. When silver is in play, which I was taught how to recognize, silver is on its own. I don't care what's going on the planet, silver is on its own. Gold has been on its own for the last couple of years because the gold market has a buyer. Gold is not going to be called gold anymore. Gold down the road is going to be a currency. And that's what's going on right now. So to match up or to try to trade the ratio, don't do it. Don't do it because you got nothing to justify when you're right. You'll have nothing to justify when you're wrong. Think about it. Look at the numbers. Believe me, I've tried it over the years. I'm trying to think of my life. Think about it. I've traded silver over 40 years. I don't know anybody who said I killed it on a ratio. So take that out of your mind. Silver's close to becoming in play. And if silver does become in play, then silver will explode. Okay, and it's not because it's got to catch up to gold. It's just because it's going to be in play on its own. Keep that in mind.
All right, that's all we got.
Good on questions? Okay. So that's where we stand. Equities. Equities are blowing people's doors in. Stop people out. Now you look for opportunities. I actually think some of these opportunities are for trades. You can start to look at NVIDIA down here. We had an area we wanted to buy. I wanted to buy. It didn't get there. I won't chase it. It's a nice bounce. But I do think the market is just in, we don't use the word rallies anymore in our vocabulary. We use the word bounces. The market's got to adjust. As you can see, interest rates are holding well because we think the Asian part of the world is selling out their treasuries. We think the rest of the planet is selling out their dollars. So what that's going to do, it's going to make interest rates higher, which is going to be an erosion of growth. So if it's an erosion of growth, then things aren't going to snap anymore. They're just going to bounce. And that's the way we're looking at it. People think, oh, this is a great opportunity to buy stocks cheap. Okay, they may be cheap, but they may bounce a little, but they might just sit there for a while. So it's going to go from a cheap stock to dead money. That's what you got to make an adjustment on. So that's why we don't look at those. If I have the same story for Apple, let's put up Apple. Okay, this is one that I think it's a good gauge. Okay, price of Apple has a story up here. Price of Apple has a story here. Price of Apple has a story here. Price of Apple has a story here. You want to know something? All four stories are the same story. It's the same story. You ask an analyst who's sticking their chest out when it's trading 250 and when it's trading 180 and they're trying to defend it, they're giving you the same story. So if something has the same story, then you tell me, why would I want to be in something like that? I can't justify why I'm making money. I can't justify why I'm losing money. I don't want to be in those. Okay, I want to be in ones that I could explain. Okay, if the price of copper goes down, I could explain why I'm losing money. If the price of wheat goes higher, I could explain why I'm making money. That's what I want to be in. I want to lose money or make money because I can explain it. I can't explain this, and no one can now. Think about it. You don't ask me. I'm not an analyst. Go ask these guys when Apple was trading up here what they were telling you, and go ask them it was the same exact story when it was trading here. Well, how does that make sense to me? Look at this. This is monumental, and because this goes down, now everyone has it in their 401ks or their pension funds or their IRAs. They're forced to liquidate other stocks. It's just that's a normal way portfolio managers or mutual funds or pension funds have to do this. So that's why you have everything else going down and it's risk off. This is incredible. Now, I trade Apple for myself maybe 3 or 4 times in the last, 7 or 8 years. And I had gotten out right around here. No, I did it here, right? This is where I sold mine out. And I said, I wait and wait and wait, and then I'll try to put it back on. Even down here, it wasn't low enough for me. And I actually think Apple's probably going to sit around here for a while. I have a spot below her. But this is something I trade very, very long term. Everything else I look for is a trade. This is something I look at as a long-term investment both ways. All right. So you have an idea where I stand. You know my views. You know the equities that we're looking at. We're looking at those sectors. We're looking at copper. We're looking at base metals. We're looking at foods. You know my opinion in energy now. Okay, so we're looking for opportunities, and they're out there. So if you want to join the group, RNTR.trading, you can see. Now, it's easy to talk. It's easy to talk now. You know where you stand. Okay, we're in the middle of April, approaching middle of April. We're up over 40% for the year. Okay, think about it. You get swings, but if you're up 40% this year, just take this in stride. But if you actually can go look at your statement or go look in the mirror and say, I can't trade this with the speed, and I'm down money and I don't know how to get it back and I'm tentative, then maybe you might want to look at RNTR. It's all here. We don't make it up. It's on here. This is us. Okay. That's us. RNTR.trading. Okay, and you can see, and it's all there. All the trades are there. We've been in a trading mode since January. We are not in an investment mode. We don't think this is an investable market. We think it's a trading market. You get 2 totally opposite administrations going through adjustments, finding distortions, finding transitions, so you can trade, and that's what we've been doing. Hence, we're not up 40% being right on something. We're up 40% of taking advantage of opportunities, and we think that's going to continue. So you might want to look at it that way, all right? We'll be back next Saturday at 10 a.m. again. If you have any questions, if you want to join, okay? Believe me, it's a very reasonable price. We will probably be making some adjustments soon, because how many people are saying, I can't believe I'm up 40% this year, okay, in a market like this, but it's there. And it's not a fluke. Last year we were up over 100%. We sit there and we wait. But now you don't have to wait. Opportunities are just falling in our lap. All right, I'll see you guys next Saturday. I'll see you at 10 a.m.